I saw you were smiling when you were hearing Ms. Lagarde. Where is the greatest source of frustration around this story? Is it communication? Is it the inflation targeting? Which part do you find lacks credibility?
As a financial services company, it's very frustrating. When I hear my policymaker say just a year ago, making this gesture, it's just a hump, don't worry, it's going to pass very, very quickly. And just 1 year later, saying longer, higher, complete 180 degree. It's very frustrating. These guys have insider information. They have all of the data of the world. They have visibility. They have data we don't have, and they set the policy. How can they be so wrong?
So, I mean, how do you define then what the second half of the year is going to look like when you clearly don't lend a lot of credibility, partially for good reason, be it to the ECB or others? But you still need to come up with a working thesis for your investment allocation. What underpins that when that credibility is missing?
It's basically relying on our data. We usually look at what policymakers are doing. If you look at companies, they were completely contradicting policymakers when they were saying inflation is transitory, but with some hesitation. Today, we have no hesitation anymore. We know what to do, and it's basically rely on ourselves, our data, and our views because we were right and policymakers were wrong. As simple as that.
Okay, let's talk about some of the specific assets in play. I want to start off with U.S. stocks. They keep surprising to the upside. Year to date, NASDAQ's up about 32%. The S&P 500 is up 15%. For those who've sat out, you've missed quite a bit of upside. You've sat out, and you continue to say, don't join this rally. Why is that?
Absolutely. And if you give me a minute, for U.S. markets, if I invest into U.S. markets, I'd be going against what I tell my investors, which is I protect you and I use risk management. One, on valuations. Valuations are off the charts for the big tech, the 7 that are on the origin of this rally. And second, on fundamentals, because earnings are deteriorating. And second, the U.S. economy is starting to slow down, and there are challenges. If you look at this rally that we've seen, year to date, since the beginning of the year, S&P is actually flat if you remove the 7 companies. Small caps, mid caps have a PE of 13, which is in line of a recession upcoming. Large caps, excluding the 7, has a PE of 18 or 19. And then you have the 7 with PEs of 30 and above, and for NVIDIA, 200. These are valuations we don't get into because there is an alternative today. One of them is, for example, Japan.
Yes, I was going to follow up on Japan, actually, because we've seen a world-beating rally in Japanese stocks. You've kind of decided to close that trade, clearly lock in the profit that you've generated. What does the second half of the year and beyond look like, especially in light of what we got from the BOJ in the last hour?
The Japanese performance has been stellar. So we're booking our profits like for like U.S. stocks. At much, much better valuations. We made more than what the U.S. markets has done. So today, with the BOJ starting to feel the heat of inflation and no potential tightening, then yes, it's time to book profits. We are still invested in Brazil. The Brazil ETF, the iShares, has outperformed the S&P year to date, and it will continue to outperform in our opinion. And we are still invested in the GCC. And stock picking in Europe as well into dividend stocks and high-quality credit.
The other thing I wanted to get your view on is cryptocurrencies. I know that you've been very much involved with this space on various fronts without necessarily getting into the details. But given what we've seen in the United States around litigation and accusations towards Binance and Coinbase, does that leave you more cautious on exposure in the future in crypto?
So crypto is here to stay. The US decided not to adopt it. The UE has decided to adopt it and embrace it as well, just like Asia. So it's an asset class, in our opinion, that is here to stay. However, over the short term, obviously, we're being very cautious. The US market is very big. So it's a fight today between people who adopted cryptocurrencies in the US versus regulators. Some very large companies like BlackRock are buying Bitcoin.
So you're not necessarily a seller of Bitcoin at this point?
Not necessarily, no.
Okay. And then where does gold fit into your portfolio?
Well, we were positive on gold. However, sometimes gold has very awkward movements. We still have a very small allocation to gold. It helps smoothen the portfolio a little bit from a risk perspective.
We're talking what, 2-3% or 5%?
2%.
Okay.
Yes. And we still see that gold might spike up because let's not forget, politically, there's a lot of stress around the world today.